This chart shows the seasonal impact of the US Producer Prices Index print over the last 275 prints spanning 23 years. US inflation, alongside US labour data, is a key focus of the Federal Reserve right now, surrounding the path of interest rates. So check out to see how the seasonal dynamics of the reaction to the print could play out on Thursday. Notice, from a seasonal perspective, the Euro-US dollar pair tends to gain into and out of the actual event. This is a US dollar weakness pattern, and expectations based on a purely seasonal basis would be for dollar weakness in and through the event, which should typically support Euro-US dollar to the upside. Now let's just take a look what expectations are for the PPI print itself. We can see that the headline is expected to fall to 5.4% from 6.2%, and the core to fall to 4.9%, down from 5.5%. Crucially, the month-on-month prints are expected to rise from the prior. January is expected to increase 0.3% from December's 0.1%, and headline month-on-month is expected to increase to 0.4% from the prior minus 0.5% fall. So a very similar pattern is expected in the PPI print that we saw on the Tuesday CPI data. So the best opportunity here would be if we saw a big miss in the data. So if we saw the headline coming in below 5.2, the core coming in below 4, and the month-on-month coming in below 0.1 for the headline and 0.3 or lower for the core PPI month-on-month, that would likely result in dollar weakness and would support Euro-US dollar upside, as investors would expect a less aggressive Federal Reserve. So that would support the seasonal pattern of dollar weakness that we have seen historically over the PPI print. Major trade risk here would be, of course, we get some Fed speakers that come in later in the session, particularly Fed's Mester speaking just after the event, but Fed's Bullard and Cook are also speaking, and that could change the sentiment around the dollar. Remember, don't just trade it, but Seasonax it.